So with that, we go to the next aspect, the procedural aspect, and this of course will go in a reasonably high speed because we are anyways behind, and I think this is something which is somewhat procedural, but yes, there are some important aspects. 4 important areas which we will be talking about is registration, payment of taxes and how the payments and all would happen, the concept of assessments and appellate procedures. So I think Aman will quickly take us through the registration procedure, which basically is, there is going to be a common portal. One thing which I just quickly highlight is not the fresh registration, which is not going to be a very common thing, but the transition which we are talking about. What we are told is on the date of transition, they already have a centralized database wherein based on PAN number they have mixed up and found unique assets. From service tax, VAT, all of that is already done. Backend it is done. So they will give you a window of 6 months. They will automatically allot you GST TIN number as they feel appropriate. So your VAT number will automatically get transitioned to a GST TIN number. And you will be given a login ID and a password which will come to your registered email ID and as mobile. So that's an important take home for you. Go back, check your registrations. Whether your email ID is valid email ID, whether your mobile numbers are valid mobile numbers. If no, please right now get it changed in the database. Otherwise it's going to be, at that date it's going to be just too much of flow of activity happening at that time. So they'll set you the login ID password, you go online, check all your information. You can change information wherever required, and there will be documentation which you will have to submit which they will define. You have to do all this process within a period of 6 months from the transition. If you do it within 6 months, no problem, your provisional registration will get converted into final registration. But if you are not able to do it within 6 months, your registration will get cancelled. So again on auto cancellation, and this is the code which we are talking about, the GST network. You will have a state code like we have 27 for Maharashtra right now. Thereafter you have the PAN number. Then you have within a particular state, if at your choice you want, you can have multiple registrations for different business segments or product areas. If you do that, then you will have that code. Then the 14th one will be for identifying the IC and S components, and then you have a check digit, which is a random digit. So this is your architecture of the GST number which you will be getting. Now I think Aman will just take us quickly through the points, and wherever there are questions, we'll take them up. Yeah.
Section 142 talks about data migration of the existing assessees. Data from the existing state and central department will be migrated to the GST network. Data that will be migrated will be first approved by the assessee only on the online portal. Necessary modifications can be made online before the certificate is generated. So option to modify data shall be given to the assessee. Unique identity number. United Nations and multilateral financial institutions and organizations notified under the United Nations Privileges and Immunities Act 1947, consulate or embassies of foreign countries will have to apply for UIN instead of GSTN. This UIN allotted to these special cases will be a point of communication with the tax authorities.
So this is where we said that the United Nations bodies also will be required to charge, and this entire concept of unique registration is for the purpose of enabling a refund to them, directly to them by the governments. Yeah, threshold.
We then move on to threshold limit. A threshold of aggregate of all India gross annual turnover is prescribed, below which registration shall not be required. Subsection 6 of section 2 states export turnover and exempted supplies will also be included while considering this threshold limit.
Please note that the threshold is 10 lakhs all India.
Application for registration should be made within 30 days from crossing this threshold limit. In the case of delay in making this application for registration, credit for purchases prior to the date of registration shall not be allowed.
So we have some special assessees, casual taxable persons, non-resident taxable persons. I think we just quickly go through that. Yeah.
So who is a taxable casual person is someone who desires to conduct business in a state for a limited period. Basically, occasionally undertakes transactions in a taxable territory where he has no fixed place of business. On the other hand, non-resident taxable person is someone who makes an intrastate supply of goods or services and is not a resident in that state. He occasionally undertakes transactions where he has no fixed place of business in India. Casual taxable person and non-resident taxable person both can obtain registration for limited period. However, by discharging liability, casual taxable person shall have to pay advance tax by way of demand drafts by estimating his liability. However, non-resident taxable person need not pay advance tax as a deposit.
So this is one area where, because you will have cross-border, cross-state services or exhibitions and things like that, for that this type of special provisions have been created.
We now
That
move,
happens in multiple places of this.
we now move to multiple registrations. When will the assessee have to opt for multiple registration? Case 1, when he has multiple business verticals within the one state, or he has operations in multiple states. In the first case, credit can be distributed only if inputs are actually used by that business vertical. For input service distributor, the concept of ISD, similar to that in the service tax, is also proposed under the GST law, however only for input services.
Cancellation is again one area which we are kept on threatening you at times. I think we'll talk about it.
The signed copy of the summary extract of submitted application form which is not received by the department even after a reminder, your certificate of registration shall be liable for cancellation. Taxpayer contravening certain specified provisions of GST law, his registration would also be liable for cancellation. If taxpayer has not filed any return at all during a prescribed period as prescribed under GST law, his registration again may be subjected to cancellation. Consequential to cancellation, the tax will be required to be paid for the input tax credit of goods lying in stock on the date of such cancellation. We move to surrender of registration by the assessee. Taxpayer can surrender his registration at the time of closure of his business. Also, when his gross annual turnover falls below the threshold limit for registration, the taxpayer can surrender his registration. Few other instances involve transfer of business, amalgamation of taxable person with another legal entity, or demerger. Also, when the taxpayer doesn't commence his business within the stipulated time period prescribed, his registration shall be deemed to be surrendered.
One important aspect for dormant companies. We have so many cases of dormant companies lying within the group. Now, if you have a dormant company, we have a provision which says if you don't commence business within a particular time frame, we will cancel your registration. Again, this is required because as an indirect tax number, you are entitled, the risk of the government increases. They feel that you are entitled to collect tax, and if you don't file returns, that tax gets wasted. So they say if you're not going to do any business, don't take the number. Take it when you actually start the business. So that's where I think this. Yeah, so when there's an amalgamation of one entity, let's say A and B gets merged into B. So A subsumes its role. So A's number will have to be surrendered. And of course, A and B's merger will be effective for the GST law only from the appointed date and not from the effective date. So then necessarily there is an obligation for you to surrender the old TIN, which company has already got subsumed into another company. So this is an interesting concept. I highlighted that there is a lot of importance. Yes.
So what will happen to the input credit which is right now available with the assessees?
Existing, we have a transition provision. We have a separate section. We'll be talking about it in transition. Yes. So the other one we have obtained another one. No. That will continue in one of the companies. So let's say A gets split into A and B. A ka number will continue. B will have a new number. Unless you have A getting split into B and C and A getting lost totally, then A surrenders B and C. So it will all depend on what's your arrangement scheme. Based on that, it will work. But only saving grace, and I think it's very important, is that it will be effective from the appointed date and not a retrospective date. Otherwise, it would have been a chaos. It does contradict. But income tax, you are taxing net results, so it is still okay. Here, what happens is, moment you say that retrospectively I am not the supplier, all my vendors' credits become a question, all my customers to whom I have passed credits become a question. Yeah. It's contradictory. So it's a special provision they have created to say that we will artificially deem these to be separate persons till that time. which is there in VAT. It's a time-tested proposition under VAT since many years. So it's good. In a way, it resolves lots of operational issues. Otherwise, there could be n number of operational issues. Because then, let's say TDS, and we have TDS, TCS, all those provisions here. So who will claim the TDS credits? Whether it will flow? Because officers will not understand partial sums and all. For them, it's just TDS में PAN number X है, आप credit Y में मांग रहे हो नहीं. That's what is going to happen at the ground level. So operationally, I am happy with this provision. Yes. Yeah. So you have a choice of either taking a single registration, or you can choose for 3 separate registrations. Optional. And for that, you have to have the business segment as defined under an accounting standard 17 A17 of the institute. So they have defined what is meant to be a business segment, and only if it qualifies as a business segment under that AS17 criteria, you will be eligible for a separate registration for that segment.
But
Optional. I would not suggest anybody to do that. Unless there is a very strong reason to do that. Why do you want more registrations? As it is, you have 13 to 3. Why do you want to multiply it by the number of businesses? Okay. So this is an interesting provision. The next one, which is a compliance rating. And we talked a lot about vendor due diligence, and I think most of the persons here would have a question that what would the government do to make sure that the vendors in the trade in general are compliant. So they are talking about providing a compliance rating. So there will be a star rating, and they'll say that okay, there's somebody who's a 1 star, there's somebody who's a 5 star, and this will be an indication for you to decide whether you should deal with that vendor. The government will give this rating, and that rating will be an indication. It's just an indication, please note. Somebody who has got a 5 star, if he does not upload your return, you will still not get credit. But if somebody is a 1 star, you should be very cautious. And how will they give this star rating? They will say that it will depend on various parameters, whether they are generally uploading returns in time, whether there are number of mismatches are less or more, and various qualitative and quantitative parameters they will decide internally, and based on that they will give a compliance rating which will be available in public domain on the GST portal. So a wonderful thing. The process reports, which of course came before the model draft law, talked about blacklisting also. The GST draft law doesn't talk about blacklisting, but the model law did talk about blacklisting. So you have star rating, and then you have blacklisted dealers, those who are clearly untouchables. You should not touch. Like something we have what is known as a Hawala dealers today from the VAT regime. Something like that was also proposed in the business process report, but that is not something which has really come out in the draft law. So that is also there.